I thank you all. I'll just comment that when you have this caliber of audience, usually everyone's in the hallway. So I think it really speaks to what an incredible event organized. And I can say that because I had absolutely nothing to do with it. So I can just enjoy the pleasure of my colleagues who I'll introduce momentarily. I did want to make one acknowledgement, and it's actually related to the document you have on your seat. It's called Opportunities and Obstacles in Financial Inclusion. And David Alvarez, who is with us, I don't know if you can raise your hand. David, there he is right in the front, was very instrumental. And actually, I'm going to speak about the process he used that involved our esteemed panelists. But without further ado, let me introduce them. And I'll start with Mariela Zaldivar, who works for the Superintendency of Peru. She's the Director of New Products and Client Services. Also serves on two important commissions that are related to a lot of the themes in the FI2020 conference. One is on client protection, and one is a commission on the National Strategy for Financial Inclusion. And that actually is a great segue to introduce Oscar Graham, who's with the Ministry of Economics and Finance in Peru. He also serves on this commission and will share with us a little bit some of the reasons why Peru was chosen to be highlighted at this very important global conference. And last but not least, the person I know best on this panel, Gino Picasso, founder and CEO of GloboKasNet, an agent network management company that helps banks and other corporations extend their reach beyond branches and beyond the bricks and mortar that keep services so costly. And I did want to, again, at the risk of sound bias, because I am Peruvian and very proud Peruvian, as I'm sure my colleagues are as well, I do think there's a lot of evidence that really underscores why this was chosen. I'll just highlight one. There was a blog posting, actually very serendipitously this summer by CGAP, by Javier Faz, who many of you might know, who actually talked about the second wave of financial inclusion in Latin America. And he spoke a lot about Brazil being the first wave, but really highlighted three countries, Mexico, Colombia, and Peru, as part of the second wave, and really focused on Peru and the thoughtfulness with which it developed its regulatory framework. It waited, it was later than Mexico, and many of the reasons why was that it was really reviewing some of the other examples, lessons learned from other countries, and a consultative process that I think really mirrors how this document was created, really talking to both public sector as well as private sector. And I think the reason why this panel is put together is really showing, I think, in a very concrete example, how public and private sector can work synergistically to really help advance our shared goals. So with that, and with my warning that we're on a time schedule and I have a tendency to speak quickly when I'm rushed, I'm going to really dive into questions and let you hear from the real experts on this panel. And I'm going to start with Mariela. Mariela, one of the reasons why I believe this could have happened in Peru, this incredible framework, is partly because of a very stable regulatory framework and a general approach Peru has historically taken in thinking about how to create incentives in the private sector and balance the dynamic markets and the positive results that come out of that with client protection. So I'd love just to hear, knowing the findings of one of the recommendations or opportunities the paper cites about creating a dynamic market. I'd love to hear, from your experience, both about the process, about how these regulations came about, and how they really exemplify some of the recommendations in the report.
Okay, thank you very much for the invitation. First of all, I can say that the regulation it's developed not just by the regulator, but it's in coordination with the private sector, and in the case of the consumer protection, also with the civil society and Consumer Protection Association. Actually, we pre-publish our regulation before we publish it in order to receive comments. Then we organize different meetings so that we will be sure that we have a good understanding of the comments. We understand that the private sector is the ones that are in touch with the client, and that the client have also something to say. That's why in the case of consumer protection regulation, we made a media interview so that we can present the most important changes introduced in any regulation we implemented, and encourage people to comment on them. We start probably regulating about financial inclusion in 1996, 1997, when we established a regulation for microcredit, specific the definition of microcredit that later allow us to give a regulatory framework around this definition. It helped us a lot because it could give us an understanding that all the products, traditional products, are not necessarily have the same treatment. So we include these changes, and in 2005, when we introduced consumer protection issues, we also try to be close with the industry to make changes in the regulation that are necessarily. What we don't want is that the regulation impose any barrier that give incentive to financial sector to go deeper. For example, in the case of banks agents, we make important changes also in the regulation, allowing institutions to use this specific mechanism. Also to allow to use other banking agents that are or mobile branches that are buses that stay in specific parts of the country that receive money of loans, receive money of savings, allow people to prepay their loans, you know, on a specific day because it's the way how it works in a specific part of the country. Even in the case of the Andean, in Puno, for example, where is the Titicaca Lake, there is a boat that goes around the different floating islands, allowing people to repay their loans, to access to new loans, and to take the money of their deposits, for example.
It's a new definition of mobile banking, then.
Yes, it is. It is.
Actually, maybe, I know, Gino, it's interesting you present that timeline. Maybe, Gino, you can present a little bit about why GloboKas chose Peru. Actually, it was a decision, I understand.
Yes, we actually looked at, we're a cash in and cash out network, and we actually looked at 100 countries, evaluated them on a variety of macroeconomic and policy criteria, shortlisted 5 countries, and Peru was one of those 5 countries. I happened to choose Peru from those 5 because I was born there. But it had made the list of 5, a short list of 5, because of the regulatory openness and the framework there.
Maybe, Oscar, you can share a little bit. I know that you also serve on the Commission for National Strategy of Financial Inclusion. Mariela, give us some concrete examples of how the government is trying to promote initiatives that foster competition and innovation. I'd love to hear some of your perspective on the findings.
Okay. Well, the topics of financial inclusion are not new for Peruvian government. We are working in topics for financial inclusion, but we not name it specifically financial inclusion. There are scattered efforts, different initiatives, but from the last year, we take into account that it's better to put this in the national agenda and have a national strategy of financial inclusion. So we are working now together with the Superintendency and the Ministry of Social Development and the Central Bank to design, we are in the road to design the national strategy, and that's why the roadmap from the study, the research that made David is very useful for us. And I want to share with you some examples. For example, in Peru we have a Nations Bank, that is a government bank, and they share the office, the agency, to the MFIs. So they give the money, and just the qualification of the credit is made by the MFI. So when you have enough number of clients, you can put your own agency as an MFI. So this is a very important initiative that the government has supported, and the default ratio is near to 0. It's amazing. They are working very well because for us the government is not a good banker. The government can bring the infrastructure, can bring the good regulation, but it's difficult for the government to make a very good approach to the credit risk of a client. And in past experience, we have very bad problems because when the people take a credit from the government, they think that they can default, and this is the money of all the nation. So we are moving to a more market-oriented scheme, and this is one of the examples. And I want to share another one example that I think is very important. Ministry of Agriculture, they have a program for financial culture, financial education to the peasants, and they include them agricultural micro insurance, and they provide financial education, and there is a very interesting program because they doesn't give just only the financial education about the use of the micro insurance, but how to use it. I mean, there is your micro insurance, but in case you die, you need to follow this. Well, not you.
Thank you.
Not you.
I'm getting all the signs here that people don't want.
Your son, not your beneficiaries, how to claim the coverage of the insurance. And that means the difference between the financial education and financial capability. It's not just how is the product, what consists the product, and also what can I use this properly.
Well, actually, and you've highlighted one of the most interesting findings, and I'm sorry, I should have also explained this report. As you know, the Center for Financial Inclusion sponsored an obstacles and opportunities study a few years back, and this actually was a successor to that study and dove deep in Peru through this consultative process. And one of the interesting findings was this about financial empowerment and financial capabilities, moving beyond financial education and really understanding are people empowered and capable of making those choices. And one of the interesting findings that I apparently sort of generated some discussion was what is the role of public sector versus private sector in building that capability. So I'd love to, I know during our preparation for this panel, they shared some examples of things that are happening in Peru that are addressing this financial capability question. I think that example from microinsurance is a great one. I'd love to hear others. I know there's programs in part of the Ministry of Education. So if you could share, because it's a very ephemeral concept of how do you build someone's financial capability.
I think some important issue that we start is sitting together the public sector first, because our times is not necessarily the same as private sector, just to have a common language. So we start to sit together and find what we understand as financial inclusion, and we want to have as a challenge, having this kind of definition. We sit together. We have more than 2 months, if I'm not wrong, just discussing about the definition and where supposed to be our target group. Finally, we could have this common definition and just start to organize and mapping all the action that was done, not just by public sector, but also by private sector. We found at that time that there were many different actions done by both type of stakeholders, but the only way to improve the efficiency of the process is just coordinated everything, and it must be under the scope of a national strategy. Specific regarding, for example, this financial education, since 2007 we signed an agreement with the Ministry of Education as superintendents, including new topics of financial education in the national curricula. So since 2009, there are these topics included in the secondary school. However, what we see is that to have a good capability and the ability to use this kind of products, the education must be start in an early stage. So now, under a new review of the national curricula, we're sitting together with the Ministry of Education again, including these new concepts of financial education since primary school. So children since 6 years old start to understand what a saving account is, what a loan really means, and this kind of insurance and all these topics that must be covered. We have a problem that is train the trainers, superintendents train the teachers using this methodology cascades. how I say it, methodology, you know. We train these teachers in order they train another ones in order they teach the students, because it's not, at that time, the current teachers don't have enough knowledge about financial issues. That's why we train them. And we start measuring the impact of our programs, because we really want to make a change and not just measure how the knowledge improves since the beginning of the course to the end of the course, but if it's a real change in the ability of these teachers to transfer the knowledge. So last year we defined a baseline of knowledge, and at the end of this year, we tried to see how was transferred this knowledge to children. And also because we have the IDs of the teachers, following them in the credit bureau and know if they are incorporated the knowledge in the real life, you know, for them.
And it's very interesting for those of you following the G20, financial empowerment was one of the goals that was also sort of endorsed by the broader global community. You know, back to this question of public versus private, I think it's a very interesting and appropriate role for the education or the system of education to participate. I'm curious, Gino, I mean, one thing for me or the appeal of agent banking in general is this notion of getting closer to the client in a way that's less intimidating. I don't know more concretely how you think about client education or how that plays into GloboKasNet's business model.
Well, I think that this is an excellent example of a private-public partnership. We tried a pilot that was funded in part by an IDB grant. We chose 1,000 merchants that were buying consumer packaged goods. We worked with BBVA Bank and with the beer distributor, large beer distributor in Peru. And the idea was to go to these merchants so that they could do electronic payment. Well, of these merchants, of these 1,000 merchants, less than 5% of them had ever had a bank account, much less had a bank account presently. So hugely underbanked. In the space of 6 weeks, we were able to open 55%, 550 accounts. But we did that, and we needed to have dispensation or authority from the bank and from the regulator, because in Peru, the banking requirements were, with the exception of a very specific bank account, cuentas básicas, you had to go to the bank to be able to open up the bank account. We did this as a pilot, as a test, with the authorization from the regulator to be able to say, no, it's going to be the agent of GloboKas that is going to go to the merchant and open and give them a choice of products. Amongst them were prepaid cards, a regular banking account, a cuentas básicas, a mobile bank account, and allow people choice. And it was surprising to us the level of acceptance when you gave people choice. So, the penetration was so incredible, so successful that this is a program that now is going to be rolled out nationally. To just put it in perspective, the level of penetration in Peru is around 27, 28%, 29% perhaps. 6 weeks, 55% from unbanked, completely unbanked, to banked. That's tremendous. That's financial inclusion.
And also, I recall that the activation rate, the level of use of that was also...
The level of use is very high. 4 transactions on average per month.
Which again really speaks to, and again by industry standards, incredibly productive. So really showing that they understand what the purpose of the account is. Maybe that's a good segue into another, I think, important theme that was highlighted in the paper, which is how do you foster a culture of innovation? I mean, how do you keep markets dynamic, particularly when in a market as competitive as Peru, issues of over-indebtedness and client protection are always forefront, but particularly as a country gets increasingly competitive. Maybe again, either Oscar or Mariela, if you can speak a little bit about how do you strike that balance in actual policy examples of fomenting competition and healthy dynamic markets with client protection.
What we try is to increase transparency. With transparency, we have experienced good reductions in interest rates. We allow also different kinds of institutions in order to compete them. trying to level playing field among the different type of institutions so that the beneficiary must be the client. We share information of the credit bureau, for example, to all the financial institutions so that they could have the information of good clients in order to offer better conditions, and to know information of bad clients in order to take care about them. I can say that it's very complicated to try to balance consumer protection and financial inclusion because there is some kind of trade-off there. However, what we want in Peru is financial inclusion with quality. We consider that a good system of consumer protection encourages people to use financial services because there is a lack of trust and it is affecting the level of financial inclusion. So that if we require to institutions and the institutions make the effort to put everything in a plain Spanish, to use a contract in simple words, to make standardized names of all the fees that were created, because last year we have more than 5,000 fees that now are even the regulator. It was very crazy to understand all these kinds of fees. Now we just organize all of them in less than 20 different types. So what we want is that all the people that don't have a huge knowledge of how the financial services works could understand and compare among different institutions. So we standardize format, we standardize language, and we are working in standardized clauses also with the industry, because what we think is that the regulator don't have to just require everything. You know, there are some things that must be organized by the private sector in coordination with the regulator. And what we see is that with transparency, people could defend themselves. With financial education will be the first line of defense for people. And we are going on this. We try to put more access, more point of access to people to access to financial services, but requiring institutions to give them enough information to take better decisions, because a bad credit could isolate people for everything, for all the time, you know, because of about reporting the credit bureau.
Yes, yes. And actually, I know maybe that another way, or something that has been the result of the regulatory framework, is bringing in also new actors. Meaning, for example, you know, phone companies, I know they're beginning to become more involved in the Peruvian landscape. I'm curious, how does that, especially from the regulatory point of view, but also competitively, how do you see that in terms of maintaining this balance between access and protection?
I think there is there are two topics closely linked, because and they can go together. I can put the example of the development of the electronic money. The last, there was some, the time is running now?
No,
okay.
no.
Okay.
Beep, that's not for us.
Okay.
Someone's alarm.
Sorry, it's a little bit
No new beeps.
Okay.
We've got the horn.
Recently, we have enacted a law that regulates electronic money, and the superintendency and the central bank and the Ministry of Telecommunications and Ministry of Economy are working together in the regulation, minor regulation. So we want to assure that this is very protected to the clients, to assure how the money is put in a trust that is, in case of bankruptcy of the bank, this money from the clients is secure in a trust, for example. And we need to assure first with the regulation about the competition between the different operators. And they can share the telecommunications. And in Peru we have two operators, the principal operators, Movistar and Claro. And the Ministry of Telecommunications will assure that there are freedom of transfer between the two operators. And of course, we want to grow faster in the more people in this financial inclusion, but we need to go together with the adequate protection to the client.
That's actually another interesting result. David over lunch was sharing with me that that this process, that again the regulators were very consultative with the private sector and really creating collaboration. Another issue we talk about a lot is interoperability and collaboration among private sector players who don't always play nice together. And so apparently that's another commission or council has been created really from the private sector to begin talking about shared language, shared understanding, opportunities for collaboration. So I think, again, it's a really positive sign about what can be done collectively. Maybe just because maybe the last sort of set of questions will have to do with cost and innovation. So one of the other conclusions of the opportunities and obstacle paper was the high cost of financial services still is a big barrier to access, particularly in rural areas, and there is a very marked difference of access in the rural parts of Peru and Lima. And so wondering, again, in terms of government incentives, and also, Gino, maybe sharing some private sector about how do we deal with cost? How is it either through new technologies, other policy frameworks that get us to expand access from where we are? And I think, GloboKas is one example of even how your model has evolved.
I think that one of the key things is really trying to follow the money. Who is suffering pain, who is suffering cost, and try to get at it. We found out through our experience working with the banks that the banks have a very, very high cost of attending people or taking care of people that come into their bank branches that are not customers. These people are coming in to pay their bills. This is bad for the bank and bad for the people because they wind up standing in very, very long lines. So instead of doing and attending all these transactions at the bank branch, we installed people at the bank branch that told them to go to the nearest agent. From then on, they went to their nearest agent. Bank saves money, the people get more convenient service. The bank was willing to pay for that service. So people getting that for free. So this is a win all around. So that's one example. And the example that I just mentioned with Bacchus, a beer distributor, collection. Here, the issue was collecting a lot of cash. This was troublesome for the beer distributor, troublesome for the merchant, troublesome for all participants in the ecosystem. And we discovered a model by putting agents that could collect a lot of the cash. This was very profitable to the agent to collect because it brought more attention to their store, more traffic to the store. It was reduced the cost for the distributor and benefited the bank as well. So it was just following the money and following the money trail, and ultimately the consumer wins all around.
Any other examples in terms of innovation or policies that will foster innovation?
Maybe the regulation try to, in order to don't limit the penetration and innovation, they consider special regimes. For example, in the case of mobile banking or bank agents, the information that are given to people are presented in different ways than if the product is given in a branch, in a common branch. In the case of mobile services, that's something the regulation is pretty new. It was approved last week. There is a simplified procedure to record mechanism. There are simplified procedures how to share contracts because we don't want that people could open an account with a mobile phone and then the institution has to send to this address a huge contract. So it's not sense because at the end this cost will be charged to people. So we are considering some kind of exception and trying to understand the different nature of the different products. And this is something we also coordinate with industry, of course.
Interesting. Please.
We are also in the process of implementing the electronic chip in the identification document.
National identity.
The national identification document, yes. And this chip will contain financial information and medical information. For example, your medical history will be put in the information in this so you can access to different services. And also if you are beneficiary of a social program, there will be that information in this chip. And also we can carry some financial transactions in this chip in the future.
fantastic. That's fantastic. And I know there's also, I remember reading that, there was a moratorium on sales tax and some of the agents, that again, there were some incentives created to really promote the development of these alternative business models. With the minute that we have left, I'd love, maybe, again, in case the audience isn't convinced yet why Peru was highlighted as an example in spite of our biases, maybe one thing you'd like to share in terms of a lesson learned from Peru or an example, something that either we've mentioned or that we haven't, about what the rest of the world can learn from Peru in terms of balancing public, or how public and private collaborate, balancing access with protection. Just any closing thoughts in our last minute?
The close dialogue between private sector and the regulator is essential, and it has been, I think Peru is a great example of that. We have a very good relationship with the regulator. It's an open dialogue, constant open dialogue, trying to share the concerns and solve problems. Great attitude.
Well, we are trying to keep this market-oriented policy, and we are very open to all the private initiative. For Peru, the economic success of the last year is the private investment. That is the engine of the growth in Peru in the last decade, and we are keeping to put this as a main engine of the growth, and this is include all the development of financial operation and financial institutions.
Very good. Very market-oriented, yes. Mariela.
Probably there must be always a good balance among prudential regulation, stability, integrity, financial inclusion, consumer protection. It's a real challenge for regulators to develop a regulation with all of this taken into account. It's a real challenge. I just take what Gino said. It needs a lot of coordination with the industry, with civil society, and try to be focused on what the regulator have to be focused.
With that, I thank the CFI for again giving us this opportunity to share our experience, and I look forward to talking to you the rest of the conference.